How do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to next week's Roundup. We are going to add a new feature this week by attempting to take a look at what's going to happen next week and anticipate trading opportunities that will flow from them. And there's a lot. This is yet output from U.S. CPI, Consumer Price Index. It's still high. It has not been arrested yet by the rising interest rates, and therefore interest rates are likely to continue high. And for this set, U.S. dollar index is likely to continue rising. The story around the world, of course, is strengthening U.S. dollar. That's represented on the chart, and here it is. And let me get my va-va-va-voom sound effect, and this is the U.S. dollar on a daily chart, and it's going up, up, and away, and we expect it to continue doing so. So this is a terrific trade, dollar strong. No little doubt about that, although I remind all of you at all times, these are the capital markets. We're speculators. These are opinions, carefully researched and thoroughly evaluated, but we could be wrong. We can always be wrong. So you should only trade with capital that you can afford to lose, because lose you will. We all lose. We're not right all the time. But the objective in our business, the sine qua non of success, is to gain more money from the markets than you turn in. Because you're going to lose, you're going to turn money into the markets. The idea is to take out more than you put in. So U.S. dollar is strong on the back of continuing high consumer price indices in the United States. The next thing I want to point us to, let's take a look at the earnings. Well, we'll take a look at the calendar in a little while. The next thing I want to point us to, of course, is the unraveling of the UK. UK government is going to hell in a handbag. Mrs. Trump has just fired her finance minister, the shortest finance minister in all of British history, from 38 days or some ridiculous number like. So this is the pound dollar, the cable rate, going down. Do we think this is likely to continue? Yeah, you bet we do. This is likely to continue because the government in the UK, we do not expect to last out to the end of the year. Again, speculation. We could be wrong. But take a look at the volume numbers here. The volume is increasing that is to say, the pound exchange declining on rising volume, highly volatile volume. But we consider this trend to likely stay in train. A weak cable rate, a weak pound-dollar exchange rate. That's something we see as a good opportunity, certainly for this coming week and for the longer term. The next thing I want to focus on is Sunday's coronation of President Xi for an unprecedented, that is to say, since Mao's death, third 5-year term, in what is widely expected to be a lifetime position for Chairman Xi. And that's certainly not going to be a good thing for Chinese policy writ large. This is the weakening dollar yuan, the offshore renminbi, rising. That is to say, remember, this is the dollar on the left, yuan on the right, therefore it costs more, and the exponent for the left-hand currency, called the base currency, is always 1. The exponent for the right-hand currency is demarcated on the Y vertical axis. As the value of the right-hand currency weakens or weakens, it costs more of them, hence the rising graph, to the 1 left-hand base currency. So we can see this trend is likely to continue. There is a very small, microscopic, some might say, chance that Mr. Xi won't get that nod. We can't see it as possible, but it's remotely likely. I do hasten to point out that protests are starting to become more frequent and more widespread in the People's Republic of China. And this is the one thing that the Chinese fear above everything else. They don't fear the Japanese, they don't fear the Koreans, and they don't even fear the mighty U.S. Navy. They fear chaos and disruption in their own society. And it's bubbling up. So watch for continued volatility in the yuan rate and continued rise in the dollar-yuan exchange rate. So we've covered down, we've covered yuan. Let's take of course, we do need to look at this. This is the general situation in the stocks around. All down. We're facing, and again, this is a negative situation. I realize this is not a happy thing, but we as speculators and we as customers here at Alvexo can profit from declines through short selling. Short selling is the magic of market speculators because we can profit on the way down, not only on the way up. So, take a look at the mighty S&P 500. Down, down, and away on the weekly chart. This is probably from about the beginning of January where inflation really starts to kick in. The Federal Reserve, the U.S. Central Bank, to raise interest rates, which is always bad for the stock market because stock markets are you're buying future profits. When current money today will return higher returns than in the future, or than it did previously, money is going to move from the future market, which is the stock market, to the current market, i.e. deposits, cash. So money's moving out of these stock markets and into the U.S. S&P 500 in decline, as are the rest of them. This is the pattern we see on the NASDAQ 100, the Milan, the Nikkei, even the mighty Tadawul, as you can see here, is also in decline. Because of the here's the DAX, the Euro Stocks 50. They're all down. They're all tracking the same thing. As interest rates rise, as inflation takes hold, as recession is recession is what's necessary to wring the price inflation out of economies. So in an attempt to keep prices stable instead of rising, interest rates rise. Companies can't borrow as much, and they slow down customers slow down their purchase, and a recession comes, and that's how economies wring inflation out of their economy. So we see falling stock market values because corporate profits are slowing. It's pretty simple, but well, maybe it isn't, but that's how it works. So markets are falling. Short the markets, except the U.S. dollar index. Remember, this is the graph on the screen that is not a stock market index. It's the dollar index. It's the one that's rising. Currencies we took a look at. I do want to point out oil and what's happening in the oil market, one of my favorite commodities and many clients. If we look at the WTI, the West Texas Intermediary daily, it's been down. Here's the high back in January, February, been falling. It's expected to rise because OPEC Plus just recently cut back its production quota by 2 million barrels a day. That's a lot for OPEC. Considering OPEC Plus is responsible for about 40% of world oil production, cutting back, and which is about 100 million, consumption is about 100 million barrels a day. A 2% cut is enough for a 2% cut in world supply, and that's per day. So we expect this to turn around soon, but it hasn't as yet. So that's something to look at. Keep your eye on oil. We expect it to start to rise in the very near future. Same story for Brent. The Brent tracks the same pattern. The Brent is simply a blend of North Sea oils and it's benchmark for the Saudi Arabian crude. We're looking at wheat starting to pick up again, and wheat is starting. Corn, we expect these to rise as the Ukraine, NATO, Russia war heats up. And let me just say one thing about that, ladies and gentlemen. Beware. Beware of those who tell you the war will end soon and prevail. The Russian army is corrupt and weak. Beware. The Russian army is corrupt and weak. The alliance has history of error. They don't have a lot of sound. The taxpayers largely fund the effort is with time, and the administration in Russia doesn't have to worry about elections, doesn't have to worry about its popularity. It can continue going longer than the Western democracies can. So beware of the continuation and the escalation of the NATO war. What that is going to gases on oil prices, on wheat prices. This, by the way, is the price. Remarkably enough, it's not been rising. We had to enter. It's still October. It's early days to death. There are going to be many, many deaths in Europe due to cold and exposure and energy shortage, and so we anticipate this price to go up. And this is gas, which is not the European asset, which we do hope to be able to have on our platform shortly. U.S. gas, and so far that has not started to rise, but keep your eye on it because we believe it will. So let's round up with a look at the earnings calendar. We see that this is last week's. This is CPI, so we still see in the U.S. high inflation. Where is it? Yeah, it's running at the year-on-year inflation rate is 8.2%. with at 400, it's going to have to go much higher, and it will go much higher, and therefore the likely continuation of stock declines. Let's take a look at this coming week. And we see, oh, I didn't point out one of our favorite trades. Just take a quick look at this since we're talking about currency trades. I do want to point out the ever popular, not likely to last forever, although seemingly unrelenting dream trade is, baby, the dollar lira. It's only going up, and well, I rest my case. Just look at the chart. It's a beautiful thing. Now, the volume is declining. This is a daily chart, which may indicate a change is likely. I doubt it. Because of the smallness of those lines, it seems like it's not changing much, but it's still going up. One or two red bars here and there, but not very many. Of course, since we returned to currency, let me point another trade, and that is the dollar-yen trade. Because of Bank of Japan policy, dollar-yen is also, see this? This brings tears to this trader's eye. I don't want to say a thing because there are no so sure things, but it's pretty good. Doesn't look, this goes back to when? The beginning of March. Okay? Bank of Japan, Chairman Kuroda stating clearly, unequivocally, and quite frequently that they prefer a weak yen. Well, okay, I do too. I'm in. So that's the dollar-yen rate. Let's get back. And we see, yeah, we're going to take a look at the Chinese retail sales. They're likely to be terrible. Industrial production is likely to be terrible. GDP 2.5%. This is a country that was growing for nearly a decade and a half at 6% a year. Okay? They're in serious trouble as the zero tolerance COVID policy for a plague that knows nothing about zero tolerance policies continues to ravage them, and they're protesting vehemently in China, and so there are going to be vehement government reactions to that protest. Trade balance, that's really not very relevant. We've got a lot of producer price index, 20%. CPI. This is inflation in Great Britain, okay? CPI, 10%. Way above the US, okay? You see this? This is all really, really bad news for the UK economy, and we're looking at that, I believe, on Wednesday. So fasten your seatbelts, ladies and gentlemen. It's going to get ugly. Same thing for the Eurozone. It's going to get ugly, ladies and gentlemen. And those are going to be fine, likely to be fine trading opportunities, selling the pound dollar, selling the euro dollar short. No, excuse me. Pound dollar up, euro dollar down. Excuse me. Euro dollar down, pound dollar up. As both of those currencies, the euro and the pound, continue to weaken. We move into Thursday. Nothing too interesting on Thursday, except maybe for the Japanese CPI, but there's nothing really, that's all expected. The Japanese economy does. On Friday, we've got probably likely to be very much more bad news in the U.S. And where I missed U.S. housing starts. Here we go. Yes, that's on Thursday. We've got existing home sales. That's likely to, we're expecting 4.6 million. That's likely to go down. Month on month, year on year, the U.S. I don't know what that is. Housing to slow down in the United States too, as interest rates rise, and that's certainly logical to be expected. So, ladies and gentlemen, that's going to do it for what we expect to be a grim-looking week. Oh yes, one last thing before I end. We have in the middle of Q3 earnings report seasons. We saw the banks report out at the beginning of this week. And it's not the profits we're talking about, although that is somewhat interesting. What we're interested more in Q3 is really their projections. And their projections are the banks make out better because as interest rates rise, their loan spreads, as we call it, rise. That is the difference between what they pay on deposits and what they collect on loans rises. And that spread is essentially their profit margin. But what we want to be aware of is what these giant corporations, Johnson & Johnson's, Bank of America, Intel, putting out this, Goldman Sachs, we expect them to project lower top-line revenue growth. Their revenue stream is going to diminish. So that's what's happening this week in the earnings reports this week. And so it's a grim week, but just remember, And if I leave you with one thought, if you leave this session with one thought, please let it be this. We can profit as speculators here at Alvexo by selling short. It's the opposite of buy low, sell high. It's sell high, buy low. Sell high, buy low allows you to profit from falling prices. It's completely normal. Professional traders have been using it for centuries, and it's something that traders who are unaware of should become aware of, particularly in grim times. So that'll do it for now, ladies and gentlemen. We see a weak pound, a weak euro, a very weak yen, all against the strong U.S. dollar. So it's dollar yen up, pound dollar down, euro dollar down. Stock indices around the world down, and that should do it for now, ladies and gentlemen. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.